Hello everyone, it is Sterling here from Day Trading Forex Live, and we are back for another month-end review of all of our trades during the month of April. Now, this is our 12th month, so this wraps up a year of these month-end reviews. And during that 1 year period of time, all trades are based off of 2% risk. And this brings us to a total on the year. April was a 12% gain. And that's off, again, 2% risk on only the euro dollar and the pound dollar. So if you're trading more pairs, obviously more potential, but only on the euro dollar and the pound dollar using 2% risk per trade, 12% gain for the month of April. That brings us to a compounded gain of 271% on the year. Again, 271% on the year off just those two pairs and off of 2% risk per trade. Now, I'm going to point out something. I'll give you a time right now as I'm speaking, which can skip you forward to the first trade that was occurring in April. But I want to cover a subject that's really important. If you don't want to hear it, you can skip forward to that. But I'd recommend listening to it, as I'm going to cover a few basics to go into these videos and also one major point in regards to record keeping for services. So I get asked a lot, Sterling, why don't you use a MyFXbook? Well, one of the biggest scams that we're seeing right now in the Forex market is with MyFXbook. And not just MyFXbook, but also any of the other services like FX Blue, I think, does one. There's a few other companies out there that do it, that track trades through your broker. And so what we're seeing, here's how the scam works, and this is a critical information. If you're still buying products, it's critical information. What happens, and the reason I'm pointing this out is because what happens is brokers will run contests or different services will post results from their MyFXbook account, or they'll post a link to their MyFXbook. And what you'll find is that a lot of times, especially for these contests, like for example, AxiTrader just ran one, and lo and behold, the winner of the contest was a service, an education, that just so happens to promote AxiTrader as their preferred broker. Lo and behold, what are the odds? And it was, all trades were again verified through a third-party service like MyFXbook. Here's where the issue is. What most people don't know is that these brokers can post-date trades, or they can post-date a trade going back as far as they want. Generally, all they're needing to do is post-date a trade an hour back, a couple hours back after the market has already moved. Here's how they can do it. If you get slipped, let's say, for example, you get some random spike in the market and it was their price feed, and they recognize that it was their mistake. Maybe you've called your broker up and this has happened, and you say, I got slipped 30 pips on this and the true price never went there. What does the broker do? Well, if they're a good broker, they're going to re-quote you. They're going to give you the accurate price. They're going to give you what the price should have been, and they're going to change the result of that trade. And that is done because Forex is an off-exchange market. That can be done because Forex is an off-exchange market. And what that means is the trades are virtual. The trades with brokers that this scam occurs on, they're off-exchange brokers. They're not true ECN brokers. They're bucket shop brokers that trade against you. So what they can do is they can simply say a trade was placed here. They can log it in their system, and it will show up on MyFXbook as an actual trade. Now, the trade inside their system is just numbers on a screen. So it doesn't cost them any money to do this. They can show you a 95% hit rate or 100% hit rate if they want, with a 5-to-1 reward to risk ratio by post-dating trades. They can do that. And so what you'll find is that a lot of the people winning these competitions, especially the big ones, maybe not your small ones like the $10,000 competition that FXCM has each month, but your big competitions will consistently be won by educators or those who promote that broker. The reason being is they post-date the trades an hour, 2 hours, 5 hours after the trade. It shows up in MyFXbook just like any other trade would. Shows the execution time, the exit time. Shows up again just like any other trade, like it had been posted live. And that is how that section of the scam is run. It's unfortunate, but it's one of the best scams that's run because people trust MyFXbook. And unfortunately, It's where the most trust is, and it's where the easiest scam in the world is to occur. The second point with that, the way that people work in these scams is, for example, if you are a large enough service like Day Trading Forex Live, we have anywhere between 30 to 50,000 readers of the blog each month. That's just readers of the blog. We've had over, in some way, shape, or form, over 7,000 people as part of our paid service at some point in the service. Some of that might have been a trial. Right now, I think somewhere around 2,500 members of the current format of the way things are run. So we're a very large service by comparison to a lot of other education services. We're probably top 5 or 10% out there for education services. And you get contacted by brokers. When you're that large, you get contacted by brokers frequently. Day after day, I get offers. And what you'll find is a lot of these brokers, they offer, when you start talking with the sales team, they offer this to you. They don't do it frequently. It's not something they advertise, but I've been offered by mainline brokers where if I said the name, you would know them. And what they do is essentially create a fake track record for you. They produce the trades in your system. They reflect it on MyFXbook, and you have this beautiful track record that is completely false. It's completely fake. And that's how it's done. That's how this is being done with a bunch of EAs. I'm seeing it right now with a bunch of EAs. People are emailing me and they're saying, hey, this EA looks good. They have a MyFXbook. And then lo and behold, it's with a shady broker that's a bucket shop broker. They manufacture the trades. It makes the software look good. Because the software looks good, what they tell you is as soon as you buy that software, they say that this software works the best on this broker. And people will follow what their educator tells them to do. If the educator tells them this is the best broker, they're already learning a system from them. Guess where they're going to go? Guess what broker they're going to use? They're going to use that broker. So it's a win-win for everybody except for you who ends up being screwed. And that is why I keep track of performance this way. This is such an important part of what I'm about to say. What I just said was hugely important, and you need to start looking out for that because it's a huge manipulation with these big contests and a lot of these other people that are producing these fake MyFXbooks. And again, it's not necessarily fake because the broker is truly reporting that trade. The trade just never occurred. So again, here's why I keep track of results this way. Our strategy is based off of trades from pre-selected levels. I'm going to show you this as we go through the different trades today. What you're going to find is that our trades occur from pre-selected levels. These levels are selected hours in advance. And then not only are they selected hours in advance and written in the members area as text, but it's also saved as a video. It's saved as a video, and the video is time-stamped in YouTube. I could not change the results or the levels that I mention in that video, even if I wanted to. It's time-stamped in YouTube. It is impossible to change that. You cannot change a timestamp in YouTube. So you combine a pre-selected level. So the first trade of the month that we had was a pound long, and it was from 43.29. So just to show you this, here was 43.29 on the pound. And I'll show you this. Here's the blog from April 1st, and I'm going to do this for every trade during this month as I have been. One of our lower levels, the lower level that we came into contact with, was 43.29. That was the only one that produced a trade out of our listed levels that day. And so when we came into 43.29, you know in advance what levels are pre-selected. Now you're asking yourself, okay, well, Sterling, you give the level, but that's only one step. How do you know when to enter the market? That is the other part of this strategy, and that's what makes this video and the videos like it so accurate. Our entry strategy is 100% mechanical. It has mechanical rules that you can physically measure that determine whether it is a valid trade or whether it is not. In order to be a stop run, a level has to break by X number of pips, a certain number. It's a specific number. The confirmation candle is very specific. The rules are mechanical. There is no discretion. There is no opinion involved in the actual entry technique. The level selection, yes, and that's why that's done in advance, but the entry, there is no discretion involved. And so if you combine a pre-selected level with a mechanical entry, there's no room to make that look better than what it really is. And what you'll find in these videos is that I actually always skew the results worse than they actually were. And you'll see that in this video as well. The reason I say I couldn't skew it worse than if I wanted to is, remember what I mentioned at the beginning? We have over 2,500 members. Now, I'm sure all those members don't watch the month in review videos. Positive of that. You know, some quit trading, some move on, some don't watch the videos, whatever. But I do know that at least probably between 500 and 1,000 of those members will watch the video. So there's between 500 and 1,000 people that know the mechanical rules of the strategy that would call me out in a heartbeat if I posted a trade that was not a valid trade. And that is what makes these results so extremely accurate. It's why I couldn't manipulate it if I even wanted to. And it's why these results are so much more accurate and trustworthy than MyFXbook, because MyFXbook, I could go to a shady broker and give you a 95% hit rate with a 5-to-1 reward to risk ratio track record for the last 5 years if I wanted to. But again, it'd be completely manipulated, it'd be completely false. Would it sell the strategy? Yes, it would. It would definitely sell the strategy. Would it be accurate? Would I be able to sleep at night? No, because it would be completely dishonest. That's why the videos are done this way. It keeps me accountable. Everybody else verifies it. You combine a pre-selected level with 100% mechanical entry technique, and there is no way to make it look better than expected, and really there's no way to make it look worse, because it is what it is. It's either a valid trade or it's not. It's either a winning trade or it's not. And that is why these videos are, in my opinion, hands down the most accurate way to keep track of results. Now, you can't do this with every type of strategy. It has to be a mechanical strategy, and the things that aren't mechanical have to be pre-selected in advance. That way, you can't fake it one way or the other. But if it's a mechanical entry technique, this is the most accurate way to keep track of results. So I'm going to quit running my mouth. I hope you really be careful with MyFXbook or FX Blue or anybody else that does results by tracking trades in a system. Make sure you trust who it's coming from. Number one, the contests, again, it's 95% of the big contests are a scam, and the person that's going to win is a person that is pitching that broker. And I would be seriously cautious with it. Well, is it a guarantee it's going to be a scam? No. The person winning could be honest, but you have to ask yourself, if the person winning promotes this broker, is it likely they're a scam? What are the odds? I'm going to say the odds are pretty high. Anyways, let's go ahead and get into the first trade. First trade of the month was the pound long. It was a losing trade on the month, so we started off 2% down. And again, just as a spoiler for the month, April ended up as a 12% month. But again, we started off with a 2% loss, so we came into 43.29. For those of you members that are wondering why this first long setup is not counted as a valid trade, you can go back and look at the daily market preview from the following day to understand why that the entry would have come before major news and before news that has the ability to spike the market a certain distance. If the confirmation comes before that news, we don't take that as a valid trade. Again, a mechanical application of the rule. But the second setup was valid from that level. Second setup, stop run, confirmation, provides the entry, obviously pulls back, stops us out of that trade for a 2% loss, and we're sitting at negative 2% to start the month. We skip forward a couple days here, and we go over the weekend, actually. We go over to the 6th, and this is a trade on the euro. It was a euro long on the 6th, and it was a trade from the 1343 level. So just to show you the level, again, being selected in advance, let me drag over this. And you can see that on the euro, the lower level that we had, the one and only lower level, was again 1343. Here's the date, April 6, 2016. So here was, again, the level, 1343, comes down, creates the break. This one was a little bit unique in the sense that the break occurred prior to the start of the session. We don't take the trade, any trades between 6:30 and 8. And so this trade is still creating the stop run at the start of the New York session. The tall, skinny box is the New York session. Goes from 8 to noon, if you're wondering what time that box goes from. And provides the confirmation up here. and then provides the pullback. Very nice entry, very nice setup, runs off to the upside, and produces a full 4% take profit, 2% risk on it. All trades 4% take profit. 4% take profit hit, that takes us from negative 2% on the month to up 2% on the month. Now, there's two trades during this month that were from what I term as newly created levels. So these trades were from, we have something that we term as newly created levels, I should say, and that is a level that is not created during the daily market preview. So on this day, there was a trade from the 4110 level. If I bring over the daily market preview from the 7th, and you look at the pound, we had 4119 as a lower level. Now, there was never a trade from 4119. We very simply, we had blown through it, not produced a trade. But what we did have is we did have a newly created level forming here. It satisfied the criteria. And so there's two trades like this. One trade was a full take profit. This was a full take profit. Came back in later right here, produced a stop run confirmation, runs off for a full take profit. So one of those trades that were technically valid, because they were off a newly created level that was right on the edge, I said I wasn't taking them. One was a full take profit and one was a 1% loss. So the fair thing to do on those might be to rule out both of them. But as I said at the beginning, I skew the results to the downside. So the results are even worse than what would have actually been achieved in that scenario. So instead of throwing out both trades, instead of throwing out the winner and the loser, what I did is I threw out the winner and I counted the loser. So again, I don't know how to skew that to the downside anymore, making it look as bad as it could possibly look. And that's why this trade is not going to be counted. It's not going to be counted as a full take profit trade because it was right on the edge, and I said I was not taking it in all fairness. And so because of that, I'm not counting that as a full 4% take profit. But on the other hand, the loss that we'll see in the future that I also said I wasn't taking, I am going to count the loss. So again, throwing out a winner and counting the loss, even when they both, the fair option, the most accurate option would probably be to leave both of them out, but I'm going to count the loss. So still sitting at 2%, just wanted to illustrate that point. We go over to the pound a few days later, skip over the weekend here to the 12th. And on the 12th, we had a long setup from 42.20. So if I drag over the daily market preview, here's the daily market preview, April the 12th. The level that we had, one of the lower levels, was 42.20. Again, one spot 42.20. We were only looking for the second push to the upside that day. So it really didn't look like we were going to get a setup because we had just pushed straight up and we never made any pullback for the entry. But then later in the day, we came back into our level, 42.20. We provide the stop run. We get the confirmation back up. This runs off for a full take profit, and it brings us from up 2% on the month to now up 6% on the month. We continue over to the next trade, which is a pound long on the 13th. So this is a pound long again on the 13th. The level that we had was here. And the initial level that we had on this day here for the 13th was 42.06. So here's 42.06 just to show the level, lower level, one spot 42.06. We had an open directional bias that day, and that means we're trading from either an upper or lower point. We have long off lower or short off upper points. We're keeping our directional bias open. Came into our first lower point, 42.06. It provided a very nice stop run of 42.06. A big confirmation up, and then enough pullback to warrant the entry. This one ran off and hit about 35 or so pips of profit, and unfortunately would have come back and tagged us at break even. Now this is the second trade to the counterpart of what I mentioned a few minutes ago, where I said I wasn't going to count the winner, but I was going to count the loser. And the reason is because this level, 42.06, was broken. So we draw all our levels off the candle body. So when the market breaks through our level with the candle body, we have to reset the level. The previous level's thrown out. Now it could form a new level right in that area, and that's what this did. It's formed a new level. We have a minimum criteria. It has to push from the new point. It satisfied that criteria. And I said I wasn't taking the trade because there's a few other factors behind this, which again, you can watch the daily market preview if you remember to get the full 10-minute explanation on that the following day. But I said I wasn't taking the trade because of those criteria that I go through, which again, I'm not going to spend the 10 minutes here to go through that. And in this case, what it ended up happening is we ended up having a stop run here. We had a long candle count based on the mechanical candle count that we use, and then finally got a confirmation up here, provide the pullback for the entry. From where the entry was to the exit, right around here, right around the 5 p.m. close, was about a 1% loss. So those were the two trades that were just over the minimum criteria for a new level creation. And on those two trades, while I could technically count both, and it probably would be a fair example of the results, I've decided to skew it to the downside as much as possible and throw out the winner, count the loser. This is that second part to that. That's the loser that I'm counting. And that 1% loss takes us from up 6% in the month to up 5% in the month. And then we continue over to the next trade, which was from a newly created level as well. It was on the 19th. It was a euro trade. And it was a short from the newly created level here of 1339. So I'm not going to show you the daily market preview because, again, it was a newly created level. And what we had here is we had a creation of the level here, produced the push that we need to see away from the new level being formed. We come back into the previous level for the stop run, and we get the actual stop run here, confirms down 2 candles later. And then this trade from where the entry would have been, which again, entry in this case would have been right here at the close of the confirming candle. This trade goes against us about 17 and a half pips, maybe 18 pips. You factor in spread, and then pulls back. So as it pulls back here, it pulls back enough to get us to roughly about 10 pips down on the trade. And so we have a rule when we go from one session to the next, in this case going from the European session into the start of the New York session, we protect the trade. If a trade is already negative, the only way to protect that trade is to close it out. So the trade would have been closed at the 8 a.m. open. Again, mechanical rule, mechanical trade management, and that trade would be closed out for a 10 pip loss. It was a 2% risk on a 20 pip stop. So if we have a 10 pip stop, that means a 1% loss. And that takes us from up 5% on the month to up 4% on the month. All right, continuing forward to the next trade here. Next trade was a pound short, and it was on the same day of the 19th. So bring this over here to the 19th. Now this trade was from a predetermined level, 43.32, again on the 19th. So we'll drag this over. 43.32, that was our upper point for the pound, and we came into 43.32. It was up a little bit higher right there. We get the break, we get the confirmation down, we get the pullback for the entry. This trade runs off, hits the point where we move to break even based on the mechanical rule set, comes back, tags us at break even. Unfortunately, that trade was again showing about 35 or so pips of profit before coming back and eventually stopping us out at break even on that setup. So still sitting at 4%, and then we have our next trade the following day on the euro. Next trade was about as picturesque of a stop run as you can get. This was a beautiful stop run from the 82 level, I believe was the level. Let's drag over the daily market preview. Here you go. Here was the level, one spot 1382. Again, that was our one upper point. Never came into the second upper point here. So 1382 was the one upper point we came in contact with, which is right here. We get a perfect stop run at that point. Beautiful stop run, perfect confirmation, provides the pullback for the entry, runs off immediately, hits a full 4% take profit, taking us from 4% up on the month to up 8% on the month. Continue to the next trade. Next trade was again on the euro. It was the next day, and it was a euro long. This was from a newly created level. So I'm not going to drag over the daily market preview because of that. So the level that we had was right here at 1288, and we had a very nice stop run at that level, confirmation up. Unfortunately, this trade, after pushing up nicely, went sideways, came back, closed us out at break even on this trade, and overall was a break even trade. So what you'll notice is on the newly created levels, for those that think that the newly created levels skew things to the upside and make things look better because it's a newly created point, what you'll see this month is that the newly created levels, there was 3 of them counted. One was a 1% loss, the second was a 1% loss, and the third was a break-even trade. So if you think it's being skewed to the upside because it's a newly created level, the one thing you don't understand is that newly created levels have mechanical criteria for being selected. That's one, that takes a lot of the discretion out of it. And then number two, it very rarely skews things heavily to one side or the other. In fact, this month it skews things to the downside, making the result worse than if somebody would have just strictly followed the pre-selected levels that I give all the members in the daily market preview. So anyways, we remain at 8%. And then we have the final trade because the end of the month really died out. The final trade was on the euro. It was a euro short from 12.84, and this was on the 22nd. So just to drag that over, I had 12.84 listed. Again, euro, one spot 12.84 is a lower level. And here is 12.84. We'll drag this down. And the reason that level was listed in red, I don't know if you noticed that, but it was listed in red. And the reason it was listed in red, and for those of you that are members, you can watch the preview to get the full walkthrough on that. But I said I was only using it as a backside short option. And what that means is that although it starts out as a lower level, meaning it's below the price, because I'm doing the daily market preview. The daily market preview is coming out somewhere right around where this arrow is, somewhere maybe over here or over here. It's somewhere between midnight and 1 in the morning because people start trading at 2 o'clock. Really, it could come out anywhere in here and still be fine. Doesn't matter as long as it's before 2 o'clock. So we're above the price at that time. That's why it's called lower level. And so in order to be a backside level only, what that means is we first need to break the level. So we first need to break the level and then come into the opposite side, or what we term as the backside for a backside short. And that's what we had here. We had a beautiful backside stop run, confirmation down, and that runs off and hits a full take profit to the downside. And again, nice full take profit trade there, taking us to close out the month from 8% up to a total of 12% up on the month. So really nice month overall, considering the fact that we didn't have a whole lot of trades. I mean, really since January, February, March, April, and now May. May hasn't really had that many trades either. We've had a big reduction in the amount of trades that we've had, a really big reduction. I'd say probably a 30 to 40% reduction. A lot of members, because of that, have gone to trading other pairs. They've added in some yen crosses, the dollar Swiss, maybe some other exotics to get the trade count up. That's one way to do it. I personally, one thing I recommend is you can do that. You can trade with heavier size on the pairs, on the euro and the pound. You can trade other markets. The strategy is very universal. A lot of members that want more trades just simply trade other pairs, which is very easy to do. Same rules apply to the other pairs. And so the strategy can be applied universally across those other pairs as long as you're seeing consistent flowing market. Some pairs tend to range and then make super fast moves. Those pairs might be avoided and ruled out as an option. But a lot of your pairs, your dollar CAD, Aussie, New Zealand dollar, dollar yen, pound yen, euro yen, your bigger pairs that people frequently trade, solid pairs to use with the strategy. So we've seen that reduction. Many ways to get around that if it's an issue, if somebody wants more trades, that is. But still, it shows the strategy performing well in any type of market. It doesn't matter if the market is a 60 pip range, as we're seeing with the euro right now, or a 200 pip range. The strategy will perform in any range, in any type of market, a trending market, a sideways market, and that is the true power behind the setup. You can have a strategy like, say, a breakout strategy. In 2008, a breakout type strategy did really, really well, especially if you focused on your reward to risk ratios. You did very well. But then there might be literally a couple years worth of time where a breakout strategy gets killed. And so a strategy that's able to consistently produce profit regardless of the market, to me, that is the most important thing. And that's what the DTFL bank trading strategy has consistently done in really every market condition that we've seen over the last 7 years. So if you want to learn the DTFL setup, you can do so by clicking on the Forex Course tab of the site. What you'll notice when you click on the Forex Course tab of the site, I'll just drag this over here. You click on Forex Course. what you'll see is you'll see the obviously the course and the video that I did a long time ago on a few topics of behind the strategy, and then the different aspects included in the strategy, the course, the live room that we provide for members, the nightly video review and preview, which I showed you, which I term as the daily market preview, the forum, which you have access to, and the lifetime support from me. And then something that I don't list, and that is the shout box. We have a chat room in the members area where members are able to chat with each other, and that's another useful tool that can be used. It is a one-time payment for lifetime access, no additional fees, no continuing fees. So again, if you're ready to invest the time into learning it, if you're serious about learning it, and you have any questions, feel free to shoot me an email. I'll be happy to reply to you. You can hit contact us, and you can reply through here, or you can simply email daytradingforexlive@gmail.com, or you can email support@daytradingforexlive.com. Either will get to us, or again, you can use the contact us button on the site, and that'll get to us as well. I hope you enjoyed the video, and I'll see you all back for the next one. Until then, happy trading.